Hello, welcome back to my channel. I'm Lyndon Wood. I started my first company at 16, my second at 19, which was an insurance business, and I sold it to private equity 4 years ago. I now manage my own capital, and of course I guide people on protecting their money. I do it free of charge. I make these videos free of charge. Subscribe if you want. You don't have to. I share what I become to understand in this wild, crazy, chaotic world that we are fortunate to be alive in, to witness and to experience. So I'm going to talk to you about treasury companies, or crypto treasury companies more specifically, the big players, and how SMEs can get involved. So if you're thinking about, or if you do already have and run a business, then this is definitely the video for you. When I advise businesses, I advise them to use their business profits as a feeder to invest some of the profit into other assets. In this case, it's crypto. But this isn't financial advice by a long shot. But this is what I see is happening out there. It's what I do as well. So imagine your company reserves not sitting in a bank earning jack nothing, but you've got it locked into Bitcoin or Ethereum or something else, but mainly Bitcoin, I guess. It sounds futuristic, but companies are already doing it. So welcome to the world of crypto treasury companies. Now, this is a relatively new thing with MicroStrategy, or now Strategy, doing this with Bitcoin back, I think, about 4 years ago, 5 years ago. And of course, they've built multi-billions. So what is a crypto treasury company? Well, a crypto treasury company stores significant reserves in cryptocurrencies like Bitcoin, like Ethereum. I think people are going into other things as well, as part of its balance sheet strategy. So it sits on the balance sheet as an asset. Now, it's non-traditional, yet increasingly attractive approach, offering potential growth, diversification, and of course, inflation hedging. Now, companies historically have done this with gold, but of course, crypto and the rise of Bitcoin in particular has given another asset class. So 3 real examples in 2025. Strategy, formerly MicroStrategy, as of early September this month, Strategy holds 636,505 Bitcoin, worth over $70 billion. Staggering amount. Can't even imagine all the noughts. A giant in the space. It's the largest corporate Bitcoin treasury in the world. And of course, Michael Saylor, the chief exec of MicroStrategy, has his ambitions, of course, and he's still buying more. Example 2, an Ethereum machine. Ether machine holds over 495,362 Ethereum, worth around $2.16 billion, backed by massive private funding and preparing for a NASDAQ launch. So that'll be an interesting one to watch. Its treasury strategy includes convertible debt and preferred stock to grow its ETH stash wisely. Now, of course, when you're on the stock market, you have different ways of raising capital to reinvest, or in the treasury cases, to go buy more Bitcoin or Ethereum. Example 3, Bitmine. Bitmine Immersion Technologies on the New York Stock Exchange. Bitmine holds over 1.7 million Ethereum, making it the largest corporate Ethereum treasury, second only overall to Strategy's Bitcoin reserves. Its shift into Ethereum has fueled investor excitement, with public and regulatory attention increasing significantly. So the pros and cons of having a crypto treasury strategy. I'll go through the pros for you first, which some of them are pretty obvious, I guess. But here goes. So the pros: inflation hedging with assets like Bitcoin, cap supply, or Ethereum staking yield. So it protects against the inflation, and the real inflation is, let's be fair, 7, 8, 9, maybe even 10 or 12%. The diversified balance sheets, reducing reliance on cash amid market volatility. The potential asset appreciation, especially in bull markets. Now, of course, crypto, like Bitcoin, can be volatile, but over the medium long term, it does always seem to grow, and has done. Sort of outpacing the S&P 500, NASDAQ, etc. Innovation signal, making companies appear forward-thinking and appealing to digital-savvy stakeholders. So it can attract additional investment from companies or organizations that wouldn't otherwise invest. So if you are future-looking, it excites investments, or investors, I should say. The cons, volatility risks. Prices can swing. We've seen in previous what we call bear markets where prices swing 70, 80%, pretty normal. Even in a bull market, it's pretty normal to see a 30% reduction. So it's volatile, but again, long term goes up. Regulatory and tax complexity, especially across multiple jurisdictions, with tax changes happening all the time, particularly in the UK. That can cause extra paperwork and some restructuring. Custody vulnerabilities such as hacks or lost private keys, hack attacks and so on, but I'm sure these multi-billion pound companies have the right advisors and the right security in place. Let's hope so. Financing strain. As seen with strategy, issuing stock to fund purchases, raising concerns over dilution and sustainability. So do the pros outweigh the cons? My personal opinion, yes, absolutely. So how do SMEs, how can they become crypto treasury companies? Well, if you're not a giant like Strategy or Bitmine, etc., then could your small or medium enterprise still tap into this approach? Well, I have, and I have a property business. It's a small one. It collects £15,000-20,000 a month in rent. That will become a treasury business, and I will deposit probably 75% of the rental income into something like Bitcoin. So that is definitely happening. So it's a very small business right now, but plan to expand it. Set governance. Board or leadership must approve modest allocation. You can do 5, 10%. My case, I'm doing 75. You can put 50%. Whatever you feel is appropriate for your business. You need to make sure you have secure custody options. Use institutional grade custodians, Coinbase custody maybe, Fireblocks, BitGo. There's a whole variety there. So do your own research on that one. Multi-signature wallets. Again, do some research on it. I might make another video on that as well. If you want one, just leave a comment, I'll make it. Define asset allocation. So core reserve, is it going to be Bitcoin, is it going to be Ethereum, is it going to be something else? Stable coins for liquidity, just decide. Ensure compliance and reporting. So make sure you partner with accountants that understand crypto. Make sure the HMRC will obviously be aware. So just set it up properly. It's important. Optional yield opportunities. Consider regulated yield platforms for stablecoins or low-risk DeFi with strong controls. That's important too. You can get yield, so an income off the back of buying a particular crypto, etc., like Ethereum and so on. Communication strategy. So decide if you'll publicly highlight your crypto reserves. Could boost branding, but may invite regulatory or investor scrutiny. And of course, you have to be mindful of hacks. But if your security is solid, then that doesn't need to be overly concerning. So as major firms continue building crypto treasuries, bolstered by rising Bitcoin and Ethereum ETFs and growing regulation clarity, the strategy is becoming more mainstream. There are more and more companies doing it. And we're still at the beginning of this curve. So all I personally see is the price of Bitcoin, the price of Ethereum, and of course others increasing. And of course America adopting all the stable coins because they want to get the spread of the dollar, and they want people to use stable coins as their digital money. And they want that to be backed and be the dollar, quite frankly, because the dollar's not doing too well, is it? So hope you enjoyed that video. A treasury company using crypto, in my opinion, is well worth doing, but that's not advice. Do your own research. Good luck, and leave some comments if you want. Thank you.